Hi, everyone, and welcome for another video where I share my experience and knowledge related to index investing and financial independence. Today, I'm going to speak about a very simple concept, something that will help mostly beginners. I'm going to speak about how to earn or how to make or lose money with index ETFs and basically the mechanisms behind gaining and losing money when we invest in index ETFs. This video follows or builds upon a previous video I have recorded, which you will find in the description, where I spoke about what ETFs were. So the title of that video was "What are ETFs?" or "What is an ETF?" And so basically we build on the knowledge that we developed in that first video. As always, well, not as always, but again, I am going to share my screen with a few diagrams, which if you're listening to the audio, you will also find in the description. You will find those in the description. And so you can watch those diagrams maybe later after you finish listening to the audio version. Right, so how do we make money with index ETF investing and how do we lose money with index ETF investing? That's what we're gonna talk about. So at the end of the previous video, when we talked about what are ETFs, we understood that ETFs are basically an investment fund that combines the assets of a lot of investors and invests in a lot of different individual companies following a specific recipe, in this case an index, for example, and then puts all of those assets in an investment fund, split it up into small shares that are then available for trading and purchase on the stock exchange. And so us as individual investors, we can easily acquire them simply by opening a brokerage account and buying them on the stock exchange. Now, today we're going to talk about how we make money with this system, right? So for most of us, this is quite easy to understand. But for the very beginners, I wanted to go through this in detail with simple words, basically, so that it's pretty clear. So let's imagine we're just going to look at one company in this investment fund or in this ETF. And so let's imagine it has a specific valuation. So the company is traded as, like, the share is traded at a specific price, the stock, and the company valuation is a specific amount. Now let's imagine that this company is actually doing well, and so the investors they value the company more than what it is currently traded for, and so people are willing to buy the stocks for a higher price. So when that happens, then that gives the company more value because it basically brings the value of the stock up, which means the company is valued higher than it was before by investors. And so that looks like this, right? So on the diagram, the space that the company takes is higher, and so each share is actually basically also expanded. So if the company's valuation goes up by 10%, each share, as long as they keep the same number of shares, will go up by 10%. And so that is basically how that will be reflected throughout the whole chain. And so if you own those stocks in your portfolio, if they're on your brokerage account, or if you own those ETFs shares, then they will have a higher value, which means you will have made money, at least on paper. You will have some growth of value of the asset, and so that is called capital gain. So this is when the value of the asset goes up, right? So this is one way of making money. Now there's another way of making money, and that is when, instead of, say, the company makes money, has profit, and instead of reinvesting to grow further, the company also, or maybe only, distributes it to the investors, the shareholders. And so the money, instead of just increasing the value of the company share, there's a flow of cash that goes from the company to the shareholders. So it goes into the investment fund. The investment fund then distributes that to the owners of the investment fund. And so as an ETF shareholder, you will receive some of that on your account. And so that is called dividend. So that's when the distribution of a company's earning, right? So this is the dividend, the distribution. Now, these are the two ways, the usual ways of making money with index ETF. There might be ways I'm not aware of, but these are the ways that we are aware of. And so this is an easy way of looking at those two at those two ways of making money. Now we can also lose money with the same principles, but going the other way around. So let's imagine that the value of a specific stock for a specific company is deemed lower than what is currently traded for. People will not be willing to buy it at the price. They will be willing to buy it at a lower price. And so the sellers, the people who are trying to get rid of those stocks, will be lowering their prices until they can sell. And so that's when the company value goes down, right? So in this case, we can imagine company W here, which is another example. Its value shrinks. And so the value of the share will also shrink. That will impact the investment fund value. And so all of the ETF shares will also go down in value slightly, proportionally to the reduction in the investment fund. And so that will be reflected in your portfolio as well, right? So say a specific share was worth 100 euros per share, then it goes down to 90. Well, that will be reflected in your brokerage account. If you had 10 of them, instead of having them be worth 1,000 euro, they would be worth only 900, right? You would have lost 10%. And in this case, 10% of 1,000 euro is 100 euros. So you're down to 900. So that's when there's capital loss. Or this is a negative capital gain, reduction in value. And then the other way of losing money is when the company stops distributing dividends. So if not all companies distribute dividends, but those who do at some point might be reducing or completely stopping dividend distribution because they don't make cash and so they can't distribute earnings, right? And so that can happen as well, especially if you've been focusing on dividend payments, then the reduction of dividend distribution can have a big impact on the health of your portfolio. So these are the two ways of losing money. Now, there are more ways of losing money or making less money. And that is things that we've talked about before, right? We spoke about the ways index investors actually, why the average investor doesn't even get the performance of the market on average. And that is because of a combination of high fees and emotional behavior and speculation. And we saw that this difference, based on the Dalbar study, was 4% altogether, right? And that was the key reasons for this massive difference between what investors were getting and what the market was getting, was because of these two main points. And so we need to be very careful about these. I had the whole video on that as well. I believe that was the last one, so I will link to that one as well. And then there's one more aspect that can, basically get in our way, and that is paying unnecessary taxes. So if your investment strategy and your portfolio are not optimized for taxes in the country where you live, then that can be also a drag on your portfolio growth and cost you a lot of money if you do it wrong. If you don't declare taxes, or if you don't pay and declare certain things, that can lead to high fees and penalty fees, which can be very, very bad for your financial health. And so we've spoken, as I said, we've spoken about high fees and emotional behavior and speculation in the previous video. And so in an upcoming video, we will talk about taxes in Belgium and how they can impact your investment, and then how to optimize your investment for taxes in Belgium. So this is something that I'm preparing, and so you will see this in the future at some point. There you go. I hope you found this useful. Yeah, I hope you found this useful. It's, as I said, is for very beginners. If you are a very beginner and you've seen this video and you liked it and you found it, you learned something, then let me know in the comments, because that helps me understand whether what I'm creating is relevant or not for people watching this. And if you know your stuff and you see that I've missed something, then let me also know in the comments, because I want to make sure that I get better at this. And so I'm not a top expert, but I'm sharing what I know, just as a way to help others. Because this simple knowledge, as I said many times before, can transform lives. It's changed my life completely, and I want this. I want you to be able to benefit from that as well. So there you go. Right, that's all for today. Thanks for watching all the way till the end. Again, let me know in the comments what you thought. Feel free to share this with other people as well, if you think this can help them. And until next time, take care. Cheers.